Buying or renting an office space, that is the question. Number one is a big debate about that. When I asked you how many of you own your own office space, I think a good large number of you did that. Could you raise your hand again if you own your own office space? That's great. Normally we don't get this large of a percentage. You guys have already made an amazing decision by doing that. I'm going to explain why it is such an amazing decision. And for those of you that did not raise your hand, if you haven't actually opened your new practice yet, you should try to incorporate it into your plan. Many banks, dental lenders like Citibank, Wells Fargo, there's a long list of dental practice lenders. They'll lend you the money. You're going to use other people's money, the bank's money, to leverage yourself in a good way so that you own the property. Not just the practice, but own the property itself. So definitely want to take advantage of that. We believe it's one of the best strategies to accumulate wealth. And the way you want to look at that office space also, it's also going to be another retirement plan for you, right? So you're going to have your other real estate investments, maybe bringing in rental income. You're going to have your retirement accounts bringing in income during your retirement years. Now you're going to convert after you sell off your dental practice down the road when you decide to retire. Now you're going to collect rental income from that property throughout your retirement years. So getting to financial independence is real easy, but if you're not implementing these strategies and not thinking it through, it's not going to happen by chance. And just to reiterate what my son said before, earlier today, every time you need to make a financial decision, should you make that decision on your own? Absolutely not. That's what your investment advisor's there. That's why your CPA is there. Have that conversation. Maybe it'll take 15 minutes, maybe a half hour. It's well worth that time because you want to set yourself up for success, not for failure. Okay, so one advantage. Wouldn't you like to pay yourself rent as opposed to paying it to a landlord? That landlord's collecting those rent checks from you because they're profiting from you being there. It's better to pay that rent to yourself, for sure. Number two, you're building equity. So historically, if you buy a building, 10 years from now, that building will probably be worth maybe not double the value, but there's a good chance it could be worth double what you paid for it 10 years down the road. To have a rate of return, a compounded rate of return of around 7% on a real estate investment is very, very practical to estimate. So you're building equity because over that 20, 30, 40-year period that you're going to be in practice for yourself, that $1 million investment in that real estate could easily appreciate to $4 million, $5 million. Really is a no-brainer to buy the office space itself. This one kills me, and hopefully some of you that didn't raise your hand didn't already make this mistake. You rent out a space, it's exactly in the area you want it to be, but the building's a mess. Now you go to Bank of America, get a $500,000, $600,000, $700,000 loan, you tear the space apart, put in new electric, new plumbing, new floors, new ceilings. You just gave your landlord a building that's worth a lot more money. Why invest and put that kind of money into someone else's piece of real estate? If you own the property and now you just spent $500,000 in renovations, you just added value to a building that you own, building even more equity for yourself. So build-outs are a necessary evil, especially if you buy into an old practice or a space that isn't being used as a dental practice. But don't make those improvements for the landlord, make them for yourself. How many of you have heard the word depreciation? I'm sure most of you have heard about it. It's probably the most misunderstood things out there. But let's just say, to make simple numbers, let's say you buy a building for, let's call it $1 million. The government allows you to write off the value of that building over a period of time. Let's say it's 30 years. So you're going to take 1/30 of what you paid for that building. I'm oversimplifying it, but the government gives you a deduction for something you're not even paying for, right? Because the presumption is the building's losing value every year, but we know better, right? Over the next 10 years, it may double in value. The government's letting you write something off that you're not actually paying for. It doesn't get any better than that. That's called depreciation. It's a phantom deduction. So what does that mean? Let's say your profit was only $30,000 related to that rental property. Let's say your profit was $100,000. If you get a $30,000 depreciation deduction, you're not going to pay tax on $100,000. You're only paying tax on $70,000. Tremendous, tremendous tool. The other beautiful thing about owning real estate, and I believe the gentleman in the back there who's still standing up because he wants to make sure the blood's flowing, you had that question for my daughter. If in your case you're selling your dental practice, what you're going to want to do is possibly use some of the capital gain from the sale of your dental practice to invest in a qualified opportunity zone to get all the benefits we were talking about related to qualified opportunity zones. You had asked the question about your real estate. With your real estate, qualified opportunity zone is a good choice, but it doesn't do anything as good as a 1031 exchange does. I'm going to talk at length about a 1031 exchange shortly, and you're going to see how that will basically help you out there. So 1031 exchange, again, is a code section, but it allows you to defer the entire capital gain on the sale of your real estate, including the phantom deduction when you sell the property. Now you got to pay tax on all that depreciation you took. 1031 exchange defers the tax on that as well. So very, very exciting stuff. My attitude is if you could buy the building when you're setting up the practice, you got to definitely go in that direction. Okay, anybody have any questions on what I just talked about? Great. So how many of you have ever engaged in a 1031 exchange? Okay, so you know what I'm talking about. Unbelievable tool. Unbelievable tool. It's a great wealth accumulation tool, gives you great tax advantages, but it is a phenomenal generational wealth strategy as well, because you're going to be able to leave a legacy to your children that's going to be absolutely terrific.